Welcome, everyone. Today, we're embarking on a deep dive into one of the most talked about and, at times, controversial companies shaping the future of technology and finance. That company is Palantir Technologies, a name that's become synonymous with cutting-edge data analytics and powerful software solutions. Palantir stands at the intersection of big data, artificial intelligence, and national security, operating in a space where information is not just power, but a critical asset for decision-making. Once shrouded in secrecy, Palantir has evolved from a mysterious Silicon Valley startup into a global powerhouse, providing essential tools for governments, intelligence agencies, and Fortune 500 companies alike. At its core, Palantir's mission is to empower organizations to extract meaningful insights from vast, complex data sets, turning raw information into actionable intelligence that can drive critical decisions. Since its highly anticipated public debut, Palantir's stock has captured the imagination of investors, with its value surging and its reputation as a tech titan solidifying on Wall Street. The company's journey from a private, secretive firm to a publicly traded giant has been closely watched by analysts, journalists, and investors, all eager to understand what sets Palantir apart in a crowded tech landscape. Investors and industry experts often describe Palantir's software as the central nervous system for modern institutions, seamlessly integrating data from countless sources to provide a unified real-time view of operations. Its platforms are trusted to solve some of the world's most high-stakes challenges, from coordinating military operations and counter-terrorism efforts, to accelerating drug discovery and optimizing supply chains in the pharmaceutical industry. Palantir's technology has even been deployed in humanitarian crises, helping organizations respond to natural disasters and public health emergencies by making sense of chaotic, rapidly changing data. As of August 2025, Palantir's growth trajectory shows no signs of slowing down. The company continues to secure massive multi-year contracts with both government agencies and private sector giants, ensuring a steady stream of future revenue. Behind the scenes, teams of engineers and data scientists are constantly innovating, refining Palantir's platforms to stay ahead of evolving threats and new business challenges. However, with its sky-high valuation, Palantir faces a critical question. Can its performance and future prospects truly justify the premium price investors are paying? The debate rages on, with some seeing boundless potential and others warning of risks. Skeptics point to the volatility of tech stocks and the challenges of sustaining rapid growth, while supporters highlight Palantir's unique position and expanding influence across industries. In this series, we'll break down Palantir's products, financials, risks, and rewards, giving you the insights you need to decide whether this data giant deserves a place in your portfolio or simply your attention. To grasp Palantir's potential, examine its core products: Gotham, Foundry, Apollo, and AIP. Gotham serves government needs, connecting disparate data to uncover threats. Foundry breaks down data silos for commercial enterprises, driving growth. Apollo ensures seamless software updates across environments, a competitive edge. AIP, launched in 2023, integrates AI into workflows, transforming data interaction. These platforms create a powerful ecosystem, positioning Palantir as a leader in enterprise software. Palantir's financial performance is impressive, consistently exceeding expectations. In Q2 2025, revenue crossed $1 billion, a 48% year-over-year increase. Government and commercial segments both show strong growth. Profitability has improved, with 7 consecutive quarters of positive earnings. Palantir raised its 2025 revenue guidance, signaling continued momentum. The company has transitioned from a cash-burning entity to a profitable powerhouse. Palantir's contracts are more than just business deals. They are the foundation of the company's long-term vision and growth. Each agreement not only secures revenue, but also deepens Palantir's integration into the core operations of its clients, making its software indispensable. These contracts are carefully crafted, often after years of collaboration and trust building, and they represent a significant vote of confidence from some of the world's most influential organizations. By embedding its advanced software into critical workflows, Palantir becomes a vital partner in sectors ranging from defense to energy, healthcare, and beyond. Its platforms are not just tools, they are the digital backbone that enables organizations to make faster, smarter decisions. One of the most notable examples is the recent $10 billion 10-year contract with the U.S. Army. This landmark deal consolidates 75 separate agreements into a single, unified partnership, streamlining operations and ensuring Palantir's technology is at the heart of military decision-making for the next decade. This monumental agreement not only cements Palantir's role as a strategic partner to the U.S. military, but also creates a formidable competitive moat, making it difficult for rivals to displace Palantir's deeply embedded solutions. Palantir's reach extends far beyond Earth. In the rapidly growing commercial space sector, the company has forged partnerships with Starlab and Voyager Space, bringing its expertise in data integration and analysis to the final frontier. By leading in commercial space data management, Palantir is helping organizations harness vast amounts of information from satellites and space stations, driving innovation and exploration. Beyond defense and space, Palantir has secured a range of significant government contracts, from public health to infrastructure, further demonstrating the trust placed in its capabilities by governments around the world. As Palantir's software becomes increasingly embedded in the digital fabric of modern states and enterprises, it is clear that the company is evolving into essential digital infrastructure, powering the decisions and operations that shape our world. Wall Street expects explosive growth for Palantir, with 2025 revenue projected at $3.467 billion. Sustaining over 40% growth on a multi-billion-dollar base is rare. Analysts believe Palantir is well-positioned to capture a significant market share. Long-term projections suggest revenue could exceed $8.4 billion by decade's end. However, these are optimistic scenarios, and any slowdown could derail forecasts. The pressure is on Palantir to meet these high expectations. Palantir's valuation has become one of the most talked about topics on Wall Street, and for good reason. With a staggering market capitalization of $370 billion, the company now stands shoulder to shoulder with some of the world's most valuable tech giants. This meteoric rise has captured the attention of investors, analysts, and the media alike, sparking debates about whether such a lofty valuation is truly justified by the company's fundamentals and future prospects. One of the most striking figures is Palantir's price-to-earnings, or PEE ratio, which currently sits at an eye-watering 256. To put this in perspective, the average PE ratio for companies in the S&P 500 hovers around 25. This means investors are paying a massive premium for each dollar of Palantir's earnings, betting heavily on the company's future growth and profitability. But it doesn't stop there. Palantir's price-to-sales, or PS ratio, is an astonishing 135, which is not only far above the market average, but also eclipses the ratios of other high-growth technology companies. This suggests that investors are valuing Palantir's sales at a level rarely seen, even in the fast-paced world of tech stocks. Such high multiples indicate that the market has already priced in many years of robust growth and flawless execution. This creates significant valuation risk, as any stumble in Palantir's business performance or a shift in market sentiment could lead to sharp corrections in the stock price. Investors are essentially betting that Palantir will not only meet but exceed the ambitious expectations set by its current valuation. Reflecting these concerns, most analysts have adopted a cautious stance. The consensus rating on Palantir is a hold, with a median price target that actually sits below the current trading level. This signals that, despite the company's impressive growth story, many experts believe the stock may be ahead of itself at these prices. Ultimately, Palantir's rapid stock price ascent has far outpaced its underlying business performance. The company now faces the daunting challenge of living up to sky-high expectations, with little room for error. For investors, the question remains: can Palantir deliver the extraordinary results needed to justify its stratospheric valuation, or is the stock set for a reality check? For Palantir to justify its valuation, it must execute flawlessly and exceed projections. Sustaining 40 to 50% annual growth is a monumental task. Even with optimistic assumptions, current valuation is hard to justify. Palantir needs explosive growth, higher profit margins, or continued premium valuation. Investors must decide if the potential reward outweighs the risk. Palantir's execution is top-notch, but its stock is priced for perfection. Any misstep could lead to a significant stock drop. Bulls see Palantir as a generational company, akin to Microsoft or Amazon. Bears argue the high price makes it a risky investment. The risk of a valuation reset may outweigh potential rewards. Investors must weigh the potential for long-term dominance against current valuation risks. Can Palantir grow fast enough to justify its premium price tag? The company has a strong technological moat and long-term contracts. However, the market has already priced in future success. For market-beating returns, Palantir must achieve historic growth and profitability. Long-term investors may see potential, but value-conscious ones might hesitate. Palantir is a wonderful company at a wonderful price, but the risk is undeniable.